Emmanuel, I've been thinking about mortgages, and I'm a bit confused. Can you start by explaining the basic principles?
Certainly, Peter. A mortgage is a loan used to purchase real estate. The borrower, mortgagor, agrees to repay the lender, mortgagee, over a specified period, typically with interest.
Great. Now, what are some common indices used in mortgage loans in the UK?
In the UK, lenders often tie mortgage interest rates to indices like the Bank of England base rate or the London Interbank Offered Rate, LIBOR. These indices help determine the interest rate borrowers pay.
Got it. How about reverse mortgages? How do they work?
Reverse mortgages are loans available to homeowners aged 55 or older. Instead of making monthly repayments, the homeowner receives funds from the lender, and the loan is repaid when the property is sold or the homeowner passes away.
That's interesting. Now, what about property tax? How does it work in the context of mortgages?
So property tax in the UK is known as council tax. It's a local tax collected by local authorities to fund public services. It's not directly tied to mortgages, but homeowners are responsible for paying council tax on their properties.
And what about land tax? Is it the same as property tax?
Land tax, also known as stamp duty land tax, SDLT, is a tax paid when purchasing a property or land over a certain value. It's a one-time payment and is separate from ongoing property taxes like council tax.
I see. Now let's talk about repayment types. What are the common repayment methods for mortgages?
There are two main types: repayment mortgages, where you pay back both the capital and interest-only mortgages, where you only pay the interest during the mortgage term and repay the capital at the end.
Interesting choices. Can you explain the concept of a fixed-rate mortgage?
Certainly. With a fixed-rate mortgage, the interest rate remains constant for a set period, providing predictability in monthly payments. This stability can be advantageous, especially during periods of economic uncertainty.
And what about variable-rate mortgages? How do they differ?
Variable-rate mortgages have interest rates that can change, often in response to fluctuations in the Bank of England base rate or other specified indices. This means monthly payments can go up or down, depending on market conditions.
Let's talk about equity release. How does it work, and how is it related to mortgages?
Equity release allows homeowners to access the equity tied up in their properties without selling. It's commonly used by older homeowners to supplement their income in retirement. There are two main types: lifetime mortgages and home reversion plans.
Fascinating. Now, what is the role of a solicitor in the mortgage process?
A solicitor plays a crucial role in the mortgage process. They handle the legal aspects, including property searches, title checks, and ensuring that the property is suitable as security for the mortgage.
How about insurance? What types of insurance are typically associated with mortgages?
Mortgage-related insurances include life insurance, critical illness cover, and income protection insurance. These policies provide financial protection for the borrower and their family in case of unforeseen events.
Moving on to affordability, how is it determined in the mortgage application process?
Lenders assess affordability by considering the borrower's income, regular outgoings, and financial commitments. They use a stress test to ensure the borrower can still afford repayments if interest rates rise.
And what's the role of a mortgage broker in the process?
A mortgage broker helps borrowers find and apply for a mortgage. They have access to a range of lenders and can provide advice on the most suitable mortgage products based on the borrower's financial situation.
Now let's talk about prepayment penalties. Are they common in the UK?
Prepayment penalties, also known as early repayment charges, can apply if a borrower repays their mortgage early or exceeds agreed-upon overpayment limits. The terms vary between lenders and mortgage products.
How about guarantors? Can someone act as a guarantor for a mortgage in the UK?
Yes, a guarantor can support a mortgage application by providing additional security. They are typically a family member who agrees to cover the repayments if the borrower is unable to do so.
Good to know. Now, regarding credit scores, how important are they in the mortgage application process?
Shotsu, credit scores play a significant role. Lenders use them to assess the borrower's creditworthiness. A higher credit score increases the likelihood of approval and may result in better interest rates.
Let's talk about mortgage affordability stress tests. How do they work?
Stress tests assess whether a borrower can afford mortgage repayments if interest rates rise. Lenders typically apply a higher interest rate than the current one to ensure borrowers can manage potential increases.
Final question, Emmanuel. Are there any government schemes or incentives for first-time buyers in the UK?
Yes, several schemes aim to assist first-time buyers, including Help to Buy, shared ownership, and the First Home Scheme. These initiatives provide financial support or reduce property prices to make home ownership more accessible.
Thank you, Emmanuel. That was incredibly informative. I appreciate you taking the time to answer all my questions.
You're welcome, Peter. If you have any more questions or need further clarification, feel free to reach out. Happy to help.